Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, October 15, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, the first thing we need to do is harken back to yesterday. That was the thumbnail on the video. Pullback do, charts say. What did we talk about last night at length? We talked about they were getting a little bit too far from home base. And when they get a little bit too far from home base, it's not that they have to come back exactly to home base, but they come back toward home base. Give home base a chance to creep up to price. Home base is the 20-period moving average. It's the red sloping trend line. It is in an uptrend, so each and every day it will creep slightly higher toward price if price is coming down or sideways. What it does is works off some of the air quoted, because there's no measurement, overbought condition. We had a little pickup in volume today. You can see right down here. And by the way, is everybody aware, this is regular way options expiration week. Nothing like last month with the quadruple witching business. This is just regular way options expiration. Regular way means the third Friday of each month. I'm aware that options expire every single day, depending on the vehicle we're discussing, but the tradition, the old school, I'm a dinosaur. The way things are done as far as I'm concerned is this is regular way options expiration week, where weird stuff can happen also in quotation marks. As far as I was concerned yesterday, they were getting a little bit too far from home base. What's the next real major thing in the downward direction on the downside, southern lane? Well, you have 574.71. That is the most recent bona fide breakout area. At some point, they will be back to run a test. We talked about this last night. We'll likely talk about it again tomorrow, whether they've done it yet or not. But it coincides with, depending on when they may do that, it may coincide with, better said, with the 20-period moving average. Do they have to come down all the way to 574.71? Can they come to 575, 575.15? And could I say days later, after a bounce away from there, could I say they came back to run a test, give or take, of the last breakout area? It was very bullish, and therefore they never even touched the actual place. They bounced in front. The bulls came out to play defense. Could I say something like that if that occurs? Of course I could. I'm telling you in advance I can say that. Could they go lower than the most recent breakout area into and below the 20-period moving average? And the answer in short is, of course they can. What's the number if they were to get below the 20-period moving average? What's the number they would go to? We'll call it 571, give or take. Write that down, put it on a sticky note. The other side, or the flip side situation. Could this be a one-day wonder and they go right back up tomorrow? Absolutely. We've seen that many, many times. Inside the number members and live room members will have the numbers on the board based on what they're doing in the pre-market. Are they rallying in the pre-market? Are they stuck going nowhere in the pre-market from today's close? Or are they selling more in the pre-market? And we'll have the numbers accordingly. Not only for the S&P, but now we're featuring all these markets, the Qs, IWM, Smashmouth, TLT, crude oil, gold, silver, natural gas, Bitcoin against the US dollar. All those numbers will be posted on the board bright and early, fresh each and every day. Speaking of inside the numbers, We'll start today with the 9:15 commentary. You don't need the early thoughts, the zero dark 30 stuff. There's no numbers in there right now because we've got the table with all the numbers we need each morning. So we'll keep this one short and brief. We got some support numbers on the board, and we have some resistance number on the board. We'll start with 585. That was the resistance number. The opening print never printed higher, essentially, or the opening candle. The high of day, as you can see, is 584.90, and they basically went down for the most part with some minor bounces along the way, but they trended down all day long. It was, in fact, a trend day down. Doesn't happen that much. Trend day up, trend day down. They do happen. Most of the time, you get some kind of a pivot in the morning before lunchtime. The market bounces back or goes back down in a retracement format and then resumes whatever trend is the prevalent trend. They were quiet early on before the trend day down began. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. You keep seeing a 582.05 on the board. As you can see, that was an important number today. They found it, they bounced around it, they traded around it, they got below it, they got back above it. But as long as they couldn't recapture it on a sustained basis, they did end up going lower. And that's what you'll find in the notes from the, as they say in the trading parlance, get-go. Remember, pause them, read them, double check the work. Then we had some stocks on the move. So we had 5 on the board today. We're going to take a look at 2 of the charts. 3 didn't hit their entry objectives, but hold your horses. Earnings season is here. They're going to start to come fast and furious. We're going to take a look at a chart of USO and UNH, even though it says jumped target. There's a method to the madness. 71.95 was the number today in USO. We had some other numbers in crude oil on the table below. USO is one of the exchange-traded products that attempts to track oil. Doesn't do such a great job all the time, but it attempts to track oil. You got a bounce initially off 71.95, traded around it, bounced off of it, and trended higher into the end of the day. 71.95 was certainly the number today. The numbers work. Now, the next one we're going to look at is UNH, but you'll notice it says jump target. And when it says jump target, in this case, it actually jumped below the third target. So this one was totally off the table. 574.73 was the third entry. By the time the thing opened, it was down at $550. But this is what the chart looked like in the live trading room. Now, we couldn't post it on the board for Inside the Number members closer to the opening bell and after the opening bell. This was a real-time live room situation, but making a real-time adjustment, 548.87 to 543.82 became the zone. Some traders, a lot of different things, good variety of things going on in the live room. We could be looking at UNH, a financial stock, Smashmouth, which we'll get to later, some technology stuff, the S&P, anything and everything, whatever's in play is an opportunity as far as we're concerned. Got a bit of a divergence, as they say in the trading parlance. It's a positive divergence. So the S&P was down about 7 or 0.8% today. That was the SPY or SPX, either way. The IWM was almost flat. It was up 18 cents, up less than 0.1%, but that is a positive divergence. And we will note both moving averages, or I should say both indices, are above their respective all moving averages, including the 20-period moving average, which, remember, getting a little bit extended, comes back toward home base. Home base creeps up, allows the market to continue higher. That's the way it works. So of note, puzzle piece on the table, positive divergence for Camp IWM. However, there's always a however. You go over to the folks down at the transportation department, and not that we had a negative divergence, we didn't have a divergence at all. It was down 100 points today, or about 0.6%. So it's a down day, almost on par with the S&P. So it's a on par day. So we have one divergence, but not our two favorite market leading indicators. That's okay. We still put one of them as a puzzle piece, and it's on the table. Two of them just solidifies the concept. Remember, the transports is our canary in the coal mine, but they haven't really done anything detrimental, so they spiked the former high, they pulled back, finished near the low. We're not going to make a federal case out of that just yet while they're above all the moving averages. You look at the daily chart, you look at the weekly chart, they're comfortably above all the moving averages. They've been eating time off the clock in this formation, back and forth, week after week, for 1, 2, 3, 4. Is this week number 5 of eating time off the clock if they come back down to retest the trend line? Or is this sufficient? Are they in breakout mode? That remains an open question, but it is a question. We are the umpire calling balls and strikes. It doesn't matter whether today is a down tape. We look at the daily chart, we look at the weekly chart, we look at a variety of different charts, even intraday, to get the big picture situation. Here's a 2-hour chart. So what are they doing? Coming back to pay a visit down toward home base? Does it have to be at home base? Did they get extended from home base? Well, if it applies on the daily chart, doesn't it apply on a 2-hour chart? Did we have any light bulbs going off just then? You never know what you're going to find in here. You have to come with a fresh pad of sticky notes. What about the Qs? Pretty decent hit today, $6.50, 665 down, point and a third, 1.34%. Technically, nothing wrong, still above all the moving averages, down day. However, we did have a pickup on volume similar to the S&P. We are coming into the 20-period moving average, and we do have a divergence in the Qs. They have not made a new high in the Qs. Remember from last night, the S&P is at new highs, but the Qs have not made a new high. That's what we call a negative divergence. Doesn't matter what the reason is. Mag 7, no Mag 7, weak Mag 7. Doesn't matter if there's another sector. Doesn't matter if the semis are at fault. Makes no difference. We take the information we have at face value, and we have a positive uptrending situation at present, but a longer term negative divergence. That's the way we have to look at it. We're the umpire calling balls and strikes. What about the financials? We had some positive news out of the financials in the pre-market, like Goldman Sachs, but that's a reversal candle on volume, by the way. That's the number they have to stay above to stay bullish and in breakout mode. Goldman Sachs. Bank of America reported, had a gap and crap. Is this a trend that's going to continue? Did we see something peter out today? We'll see, but as you peel back the onion, these are the things we're looking for. We're looking for sectors within a sector, things that have gap and craps, reversal on volume. When you see things reverse on volume, you pay attention. They still finished up a little bit in Bank of America, up 23 cents today, but they still reversed from where they opened and finished poorly. Remember, it's about where they close them, not necessarily how they trade them or where they open them. That's the most important thing. It's how they close them. Look at Smash Mouth, the semis. Look at that reversal. Look at that volume. Look down here at the bottom at the volume. They're down $14 today into the convergence of those two moving averages. Now we have a couple of different ways we can view this. They just came back in to run a test of those moving averages, of the convergence of the 100 and 20 period moving average. They're above all the moving averages, and therefore the trend is your friend. We could look at it that way, or we can look at it similar to the Qs. They're not even close to new highs. Big negative divergence, big reversal day on volume, big down day, $14 or 5% is an anomaly. How many days like that do we have? Meaning, just look at visually on the charts. How many candles like that are there? There's a few and there's more, but they're usually in the midst of some more volatility at hand. Maybe some more downside, we'll find out. I think that's what we call a shot across the bow or a flare up in the air with the semis today. And I believe the semis are a pretty good proxy for the tech space as a whole. I certainly think it's something worth watching very closely. I'll be doing that. Here's a snapshot of crude oil, by the way. This is today's activity down here. And this is the $70.17 number that was put up on the board in that table for Inside the Number members and live room members. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.